We're live.
Yes, we are. Happy Monday, everybody. We've got the four amigos here from all over the planet. Welcome, Mando, Marty, CTO. Today, we're going to talk about a whole bunch of different stuff. But before we jump in, everybody doing okay? Markets still suck?
Still suck. I think we're all just surviving. It's, when I used to trade in a bank, just to give some perspective, you'd normally have like 2 traders on the desk during this time. Like there would be 4 or 5 others who were on holiday. Half the salespeople will be away. Like it's a very, very quiet period here. Last week was a big week for data. The Fed kind of goes on like a jolly and goes to Jackson Hole this week. All the parliaments are off for summer. It's normally a very, very quiet period, but crypto's open 24 hours, 7 days a week, 365 days a year, and we have to live through the painful chop that is often this period.
Yeah, I call it the summer doldrums, and August is always the worst. Vacation time, especially in Europe. Marty, you hanging in there?
Yeah, I mean, everybody on my space, it just seems like everyone's so down, and I really can't understand why. I don't know what the expectations are. Firstly, we have no liquidity injection since 2020. This is your preparation for a liquidity round. So we're back to where we were before Luna. I don't know why people are so freaking out. I'm up 811% on Salana. I'm up huge on everything. So I think there's a lot of negativity because of expectations. I think there's been a lot of push and pump that things are going up to 100,000, the Donald Trump thing, but the expectations have been too high. I think we've got to wait for liquidity, watch global liquidity. Everything's happening. I think it's going to be fine. I just think everyone needs to chill out a bit.
Exactly. It's just a perfect storm of nothing, nothing really happening. CTO, how about you, buddy?
Yeah, I think I learned a term maybe 2 years ago or something that I think is super useful in these periods, because there is price capitulation. Everyone understands price capitulation. If price goes down and down and down and down, at the end, a lot of people capitulate. But there's also time capitulation, which is even harder when nothing happens. And now we've had half a year of basically nothing. And then many people go into this time capitulation. They quit because nothing is happening for half a year. And I think that's what we're seeing now. And it's something to watch out for. So if you only remember one thing from what I say today, it's time capitulation. Watch out for that. Don't quit when it gets boring. And I think that's exactly where we are now. And it is kind of people get depressed.
And the term I use is always darkest before the dawn. And darkness isn't necessarily light. It's also the feelings in the market, and people are having that dark feeling. So we have a big agenda today, including one more quick edition, and whatever happens live, we'll be on top of during this hour stream. We'll talk about, is the top in? Is this a top? And we'll have a very serious conversation. I made a bear video last Friday as to all the 25 points as to why the top could be in for Bitcoin. Historic lessons, what you all have learned, how you identify tops, the future of the chain that Marty mentioned after the meme coin revolution. What's next? We'll talk about other signals. We'll talk about diversification. We'll talk about what you do at 10K if you had to place it for 6 months. I know some of your ideas already, I guess. Liquidity pools. We'll talk about regulation. Everybody wants to know about free and fair elections, how blockchain can be used in certain countries around the world, even in the US, sustainability of layer 2s, and so much more. So let's jump in, and let's jump into the first quick issue. First of all, market tops. How do you all, and we'll start with Mando, how do you identify a market top? Do you use market sentiment? Do you use TA? Do you use price targets? And how do you mitigate risk? I think you're muted. Whoop.
God, I got lost there for a minute. Yeah, a range of different things, if I'm honest. But normally my trades are not necessarily reflected in, I don't time them into cycles that often. I look for trades with longer term trends rather than just cycles. That being said, if some of the things that have got me into the trade itself start to dissipate, I would also rethink the trade. So for right now in crypto, I do think it is a little bit worrying that we haven't seen, crypto's killer app, crypto's killer use case, other than payments and store of value, which has been increasing over this period. But a lot of the other utility things that have been thought about for a public blockchain have not really come through this cycle. And seemingly the more degenerate stuff was just taking place in the meme coin streets. That over the last month or so has slowly started to get more and more PvP, fewer money being put in. Essentially, it's like just speculation. And I think that's something that, has got me thinking a bit more about in order to bring in new users, new buyers of all these different, even the L1s or users of these L1s, we either have to have a pretty rapid adoption of use cases with respect to payments, or we have to see like the ETFs mop up all the crypto. And I think the ETF one is quite an obvious one. That's why Bitcoin dominance keeps on outperforming. The payment side of the business feels like a slower burn. It's obviously happening, but we haven't like overtaken TradFi, for example. And then the other use cases, the more broad use cases for things like AI, RWAs, they feel like a longer term cook. They feel like they are more like a 3 to 5 year sort of trend, depending on either technology or on the implementation of regulation / policy. So I do think it's taken this whole slowdown in the meme cycle has gotten people thinking like we need a new product market fit this cycle for us to sustain it. If it was NFTs and DeFi last cycle, really like we're just returning to just payments and store of value again if meme coins is going to slow down. So I think that does make me think about, like, we're already going to kind of come onto it with things like Salana again. Like I do think you could be here for a bit of a lull, but for me, I don't think this is a market top for crypto. Like the overall market thing that would get me bullish, and I think Bitcoin kind of drives everything. It's just global liquidity, and for me, that's only really going up, and that's like again a medium to long term trend. So other than maybe Salana, which I spoke about a few weeks ago, like maybe Bitcoin dominance is maybe Bitcoin's the thing to own for like a little bit here, just because that's where you can be most safe in terms of flows. I haven't questioned whether this is a market top. I think we're going into a massive period of easing here.
Yeah, you mentioned some interesting things there. Just to put in perspective, I always think in terms of continuums, like long lines. So you think in terms of cycles. Do you overlay those cycles across a continuum, like a 0 to 12 month cycle, a 2 to 3 year cycle, a 3 to 5 year cycle, and allocate according to that continuum?
No, I don't. Like I don't even think about stuff in terms of cycles. I think I thought it was interesting when I came into crypto that it was just so cycle based, and I think that was obviously to do with the halving. Obviously, like you do get you do get cycles in markets, but they're not like timed to 4 years so exactly. And people don't just say, oh yeah, like the S&P's been up for 4 years. Like bring up the chart of the S&P or bring up the chart of the NASDAQ. You tend to have these one cataclysmic year like once every 10, 15 years. And doesn't really look like I don't know, you can predict it. It's not like, oh yeah, we're coming into that 4th year where everything's going to go lower. So I think that debate, like it debases the argument. Like it doesn't make it as strong to say crypto is going to be like that. And I personally think that crypto is going to be a bit more like macro. It's going to be a bit more like macro markets going forward, just because of the money that's come in. It's going to be more following the broader financial cycle rather than just a crypto specific one.
Awesome. Good stuff. Marty, how do you identify market tops? What are your tools in your tool chest to know when to deliver, get out, short, diversify? Tell us your story.
I mean, to me, it's more important to identify bottoms, and I think the sentiment marks the bottom. I feel like right now, this is a sentiment bottom. Everyone's despondent. Everyone doesn't believe anymore. I mean, that's when the pump is coming. When people are down, that's your long signal in crypto. I've got the same stance as I had for the last year, and that is that this is all just an arms race at this point. And I don't know if you saw my post that got 1 million views, the one with the top 10 Bitcoin holders in the world. I mean, after Satoshi at 1.1 million, it goes Binance 550,000 Bitcoin, BlackRock 350,000 Bitcoin, Grayscale 263,000, MicroStrategy 226, Bitfinex 221, US government 213,000, Chinese government 190, Fidelity 176, and then we go on from there. This is an absolute arms race, and they're in accumulation. There's deals going on right now, shuffling around. But once this dust has settled and this list is fixed, we know Germany dropped off. We're not sure the US government. I have my theories on what they're doing. I believe they're doing an OTC deal with Michael Saylor.
Yep.
For the Silk Road Bitcoin, their second stash. But I think once this simmers down, we get a liquidity injection. It's all planned. I think it's all part of a strategy. And, we know liquidity goes into crypto. Crypto is a liquidity sponge. Okay.
Yep.
The second point I'd like to make, that's my first point. Just let this settle and you can understand why. They're not going to let the carry trade go and run up Bitcoin to 100,000 knowing there's large sellers. This is a business, okay? If you knew there were large sellers, you wouldn't let the price go. You would keep it down. That goes for BlackRock and Binance. It's clearly being suppressed. I can watch it in the charts. That's fine. You just got to trade that. You can accumulate. So I don't see a top at all. I see this as the midpoint of a bull flag. We'll get another vector the same size as we just got. Usually there's a 3-vector move. We had one. We're going to see the next. There'll be a pullback and then the third for your double top. Where that'll be around 128,000, I believe. I think everybody's down because they're not in Salana or Sui, actually. I think that is a big problem. Everybody missed that call in August last year. If they had taken that call, they'd be 8x up right now in a totally different mindset. I think that is a big problem. And, I don't know what to say about it. You saw Cardano dropped out of the top 10 today. I've been telling Cardano people to slide to Salana for over a year now. So they have no one to blame but themselves. It's just inferior technology.
And a shout out to the Cardano army as well. They are the
most
loyal,
personal, guys. Not personal.
Cardano,
if Cardano forks to something absolutely stunning, I'll be in. It's not personal. I'm a technology investor. So there you go. As far as what's on the cards, guys, this is the most bullish time in crypto history. We've got China. It could be this week. They've been changing the last few weeks. They've been changing their AML rules. Why? Because they're going to unban crypto. Okay, China is becoming a superpower.
Justin Sun, I think today said they're coming in hard, didn't he?
Yeah, this is a reason we went down 15-20% in one candle when China banned crypto. When China unbanned crypto, we'll get the move back up. Plus, the Chinese government wants to take the US government in their holdings. It's going to be interesting. We've got stablecoin regulation on the cards. 9th of September, they come back into session in the Senate. It's going to be one of the first things they pass, guys. Stablecoins will become legal tender in the US. The third thing is that crypto is global. The US is so obsessed that they control the markets. In crypto, you don't. The crypto is a global. The globe has gone full crypto. The US is way behind. And so the US people have been suppressed in the sentiment as well because of that. Fearful of US regulators. The rest of the world laughs at Gary Gensler. It's a joke. Yeah. So this is the most bullish time ever. Pull up your pants. Okay.
Okay.
Okay, go ahead.
Let's go to CTO. Are you pulling up your pants? How do you view market tops, and where do you see us going from here? Or is the top already in CTO?
Yeah, so here I have a very specific process actually, and I don't know everything. I've done a lot of things wrong, but identifying the cycle tops is one of the things that I've so far done pretty well. And I have a very specific process, and that is that there has to either be an identifiable top pattern in the chart, and the classical charting. It can be like a head and shoulder top or a clear broken parabola or something that on the classical charting is a top pattern. Or the trend is solid down. Or as in most cases, we got them both. The trend has turned down, there's top pattern in the chart, suddenly it looks garbage. That is my process, and we don't have that situation today. If I can share the screen, what we have instead is that 2 weeks ago, we got this massive, this is the weekly chart. Usually I use the daily, but if we look at the weekly chart, we have this massive reaction because price went down and then boom, it shot back up. So that means that there is today enormous buying interest at these price levels here. So that's a fact. Of course, we never know the future, but usually that's not what it looks like when it's ending. And instead, we have a very clear chart pattern, which is this channel or expanding triangle megaphone with lower lows, lower highs. And we're right in the middle of that one now. We have not broken it down, and we have not broken out of it either. If this breaks on the downside, if it starts looking like this and price closes here, okay, that's a different situation then. But we're not there yet. And I think also this can be useful if it starts looking like this. If you break this one on the upside, that's another clear indication of where we're going from here. So we have not established any top pattern in this chart. It's just boring because we're at exactly the same price level as we were in February. So of course people get bored after, February, March, April, May, June, July, August. We're sitting here and price hasn't changed. That's the only thing that has happened. There's no top pattern in the chart, and we have not broken down. So I'm patiently sitting here waiting, and I think the task for everyone is not quit because it's boring. Boring is not a reason to quit.
I think to be a little bit specific about it, and I think this is great because you're just looking at Bitcoin. But I think the main thing that people have been burnt on this year is going into altcoins, going down the risk spectrum, which traditionally at this point of a cycle, Bitcoin does a 2.5x. People would be like, right, we're going to see an altcoin cycle. And what you've really had is just that hasn't happened. And a lot of people who did that rotation have been really badly burnt. So it's a mixture of boredom, but also everyone focusing on Bitcoin. And actually, a lot of people who are in crypto didn't come here to invest in Bitcoin. They came here to see a 10x in an altcoin or in a meme coin or in a different L1. And although, Sui and Salana have been good, I think that's been the main issue here. People are getting annoyed because a lot of people were saying we were going to have an altcoin season and that there was a time to rotate, and Bitcoin dominance has just gone from 51 to 57% in the midst of a bull run. Which is
absolutely. I mean, I can go through altcoin charts here all day, and you see it yourselves, guys, everyone watching. It doesn't matter which altcoin you pick. They look the same almost. And now I just managed to pick one which looked different, but almost all of them look exactly like this. Like trend turned down back in the spring, in April sometime, and then it has just continued down, and all of them look the same. And I think exactly like you say, Mando, people are in a bunch of these, and they just haven't performed, and many or most of them are down massively. Whereas Cardano, it should be here somewhere. It looks something like this. And of course, then everyone gets super depressed, and they're down a lot. They're down like 50, 70, 80, 90%. And even Ethereum, that was kind of a stable, solid coin, is down a lot. So and then there's only a few rare exceptions. One being Solana, which looks completely different from the other one. It kind of moved into, on the USD chart, moved into a consolidation pattern instead, similar to Bitcoin. So, but almost all the other ones. So if people have like 900 altcoins, 95 of them look in a massive downtrend, and probably most people didn't manage their positions. They just hodl on the way down, and it doesn't look good. So agreed.
So do you guys look at fundamentals like adoption rates? Or is there declining user adoption or growing user adoption or transaction volumes or any of this on-chain stuff? I tend to spend a lot of time looking at it, but
that's the stuff I would be looking at, and that's the reason why I think actually all three of us actually look in terms of looking at, like, for Solana for that. If you're going to look at fundamentals instead of more technical stuff, then it's been quite easy to spot which ones had the most resilient fundamentals going into this. And I don't think those have changed, but I do think, like I said a couple of weeks ago, like, I think in this period right now, I think Bitcoin has the strongest fundamentals, just because I think Solana's, if meme coins do slow down, we could see a big impact on DeFi volumes and transaction volume on Sol. And that's what, if you're looking at fundamentals, that's what you might be looking at.
Yeah. And I'm very well aware that when we talk about different coins, our job is to focus on the best assets and not waste oxygen on things that are dead or old technology or whatever else. And people groan when they hear about, oh, Solana this, Solana that. But there are some things happening. So a lot of people are concerned, first of all, that, okay, Solana is just a meme coin chain. When the meme coin trend dies, Solana's dead. Okay, first of all, quick show of hands. Does anybody here believe that?
Not at all.
Okay. CTO, I didn't see you make any reaction. No. Okay. Second thing, there's something big coming. Mert tweeted this just, let me see, a few hours ago. Oh man, you guys are not ready for Solana's acceleration in the coming weeks. We know breakpoints happening in 3 or 4 weeks. And could this be the acceleration? Could this be that Fire Dancer is actually going to float and it's going to work? Because normally they wait for these events to have these big announcements. They did a demo of it last time around. What does your grapevine say, Mando, on this one?
I mean, do we need Fire Dancer right now? Solana's the fastest chain out there and already is dominating in all those sort of charts. I don't know if like quicker tech is kind of what the issue is. We do need an application. And although I don't believe Solana is a meme coin chain and it can adapt, the great thing about Solana is it literally adapts to whatever anyone's doing in crypto. It's great for gaming. It's great for payments. It's great for meme coins. It's great for NFTs. It's great for, I think Drift today just launched a prediction market. Like they can go into anything that crypto is doing. I think the issue right now is that we're not seeing a huge amount of use cases hit correctly. And we probably do need that new thing that's going to get people onto the chain. Like, I do think it'll be bullish to have Fire Dancer, but it's way more bullish to have a use case of the chain. So for me, I feel like this is good for Solana. I can't imagine Solana falling out of bed. Like it still looks really undervalued to me versus ETH. But at the same time, like we do need to see like huge numbers of volumes going through for us to really see the demand side of that equation.
Amanda, you mentioned something so important that nobody talks about, and I put together a model of the breadth of dApps across all the top 50 chains, and that is a really key metric to look at: is what can you run on a chain? Can you run stablecoins? Can you run NFT markets? Can you run prediction markets? Can you spin up 10,000, 20,000 meme coins in a day? All those types of things. Marty, I'm going to go to you next. What do you see in the future? And is breadth of dApps important from a technologist perspective?
I mean, I've been telling everyone for a long time that memes have always just been a liveness test. Every chain's used them. Binance used them in 2018, 19. I was there in that run. Ethereum used them in its run to build its chain, its second validator. And Solana did the same thing. Meme coins are just a great test of a global, real-world production test. And you gain invaluable data from that in the engineering side, and you make the fixes. You saw Solana fixed, it's at 2.005 right now, Solana, on ANZ's code base. So it's way ahead into Solana 2. Then we've got Breakpoint coming up, and then we all know Fidance. And our Fidance has got 1 day, 16 hours left on its ImmuneFi hackathon. So Fidance has been on a 30-day hackathon. Fidance is 0.1 on testnet. From that will, come whatever findings they made and be put into Fidance 1, which will come out. And once again, I think people need to focus on, everyone's going, what's the use case of blockchain? Stablecoin is the use case of blockchain until further notice. Stablecoin is $1 quadrillion a year. Quadrillion.
Yep.
Okay. It has one purpose, the blockchain, to make sure the transaction goes from the one user to the other securely and fast and cheap. That's all it does. And Fidance just means Solana will do that 50 times faster for every user. It's getting ready for stablecoin. Then the next use case will be obviously RWA and tokenization, which includes tokenized equities. Okay. If you remember, FTX was already doing this with Solana, which was to allow equities to be traded as tokens. Remember, the word token means to represent something. Blockchains are just databases of tokens. They can represent anything. They can represent US dollars as stable coins. They can represent digitized equities as security tokens. They can represent your rights as a human, your governance rights to vote. They can represent anything, and they will. The point of this entire cycle is to make sure that these blockchains do it as fast, reliable, and as secure as possible.
Yeah, we'll talk about votes in a minute. CTO, your top 3 use cases for blockchain as a technologist.
Yeah, I would love to see more use cases beyond speculation and transporting of money. Actually, I mean, today we have payments, we have trading, and to some extent representation of assets, mostly NFTs, right? But I would love to see more, actually. And if looking back a little bit, when I stumbled into this space in 2017, there were all kinds of ideas. And as with all technology, 99% of the ideas are garbage, complete garbage with 0% chance of success. But I actually thought that more of the remaining 1% would have kind of materialized into real world use on a bigger scale today than we actually have. And even payments isn't that big of a, it's not used that much. So I've been actually looking for this recently to try to find projects that are successful using blockchain technology as such, and that isn't connected to speculation in some kind. Because of course there we have it with automated market makers. That's an amazing innovation. Stable coins, like Marty said, is in many ways better payment than the speculative coins. But I would have liked to see more, actually, on all chains. And but I mean, Solana is well positioned here for all these use cases, definitely.
Great stuff. All right, let's switch gears. I'm going to put you on the spot here, Marty. Walk us through, and we've talked about, I call it band-aids, layer 2s, ties into ETH. You put this together yesterday, and I first read it. I felt it was very alarming. Can you share with the audience here why this is so alarming and dangerous?
I mean, this is no secret. Yeah, this is no secret. If this goes to wrap Bitcoin as well, same problem, right? It's this permissioned, collateralized model that's come through the legacy, through the Ethereum legacy. I mean, there was nothing else. That was the only way to do it. But it never kind of got repaired. And now it's drifting into larger and larger money and risk. And we can see with 9.45 beyond wrap Bitcoin, and, with a custodian just deciding one day to move. I mean, the implications of wrap Bitcoin and that decision go way over people's head. It's like literally the most risky thing ever in crypto. You've got a whole stack of loans,
like a Trojan horse ready to pop.
Well, wrap Bitcoin is the collateral on top of what Ethereum loans through all Aave and Compound are collateralized. So if these people worry that during the move they're not collateralized, they'll exit, and that can cause a DeFi bank run, which is just lunar again. This is huge risks. Then we go to Optimism, Arbitrum, Base. They're all Matic. They're all backed by one wallet of Ethereum. That's L2, with a couple of human beings and a security council that have complete control over what they can do with that wallet. That's permissioned. So we got this come out, just no one was even talking about it. Like Optimism, just they found all these really bad issues, security issues, and they just drop it in a tweet like this, and no one's talking about it. How can they just make changes? I thought L2 depended on L1, and all the L2s are supposed to talk in a council, and it just feels like it's gone rogue.
And
Base to me, the most worrying thing in crypto.
And Base now does 3 times the transaction that ETH does, which is kind of stunning too.
I mean, Base is just Optimism. They took the open source Optimism code base, made a lot of it proprietary, but just forked it off. It's the same code. So look, guys, when you do layered software, we've been doing this for years in software. Okay, you either do monolithic or you do layered. Layered is great for getting, letting other people work independently with an API, but they have dependencies. So if the bottom layer changes, all of the layers have to change. And then the layer 3 and the layer 4, when it's a huge umbrella of change, which can become very fragile. Monolithic, you have one code base. Version 2 comes out, everyone updates to version 2. You don't have any of those dependency flaws, okay? Only within libraries that it's used within. So L2 has gone that route, and anyone in architecture, in software architecture, is like, that's the whole point. We try to avoid redundancies and dependencies, and this layering is just recreating the same thing. They should have stopped and made a permissionless bridge, a permissionless L2. where
Yeah,
a smart contract controls it. And
Yeah.
there are some coming, Monad, Zeus on Salana. These are teams working furiously to solve permissionless bridging. But I'm really worried about this. The L2 thing is scaring the hell out of me. I'm just being honest, guys.
Yeah. CTO, do you see a parallel here with telco risk back in the day, where you have a lot of tech debt and different forks and different proprietary code bases, and it's very difficult to get out from under all of that? What's your perspective?
Yeah, I'm very scared of complexity. I mean, layers is something that we built a lot of complex systems with layers, but that's not really the same, because a lot of people saw some discussion said that but layers been fine. Yeah, but not these kind of layers, because bridges is a very difficult and complex thing to get right, even from a theoretical perspective. And I think the big problem here is complexity. This is so complex already. And they do some audit, you find some new security risks, because no one person can overlook the whole thing. So you look again, you're going to find another vulnerability. You look again, there's going to be another vulnerability. It's very difficult to get this right. And it's like billions at stake. And who knows, is anyone going to roll back the chain if the error, if the consequence of the error is that money went missing and it is out on the Ethereum chain? Is Ethereum going to roll back to fix a bug on Optimism or base chain? Maybe not. And I don't like it. I hate complexity, and this has gotten too complex to handle hundreds of billions of dollars. I don't like it. I want to go back to a simpler model. And here, actually, Solana is, I think, on a better track. The whole paradigm is simpler in a way, despite outages, despite other problems. Okay, but those didn't lead to those kind of issues. But we've had a lot of problems with bridges and layer 1 to layer 2 on and off ramp. It has parallels, definitely. That's my perspective. I don't like it. I think it's very risky.
Yep, the risk layered upon risk, with band-aids to try solve problems that are core to the fundamental. That was always my thesis, because I believe in things like Occam's razor. Anyway, let's go to a fun question, because everybody asks this. I get hit with this every single day. Okay, I've got 10 grand. I have to park it somewhere for 6 months. And before I start, by the way, this is very dangerous to think in terms of 6-month timeframes. We talked about the series. It's very difficult to predict what could happen over the next 6 months. So we want to park that out there first. But it's always good to get a perspective as to what you would do if you wanted to maximize gains in a low-risk way for 6 months with $10,000. Mando, I'm going to put you on the spot first. I think I know you're going to be in a little bit of JLP.
Yeah, JLP is where I put my money in right now.
Yeah.
Like, I just APY is something like 50% at the moment.
It's 30 now. Yeah,
but it changes weekly. But like, let's say roughly, it's on average over the last few months between 50 and 60%. You still have the upside from Solana, ETH, and Bitcoin, so it's 65% essentially risky stuff, and the rest of it stables. And yeah, I know I've been in this for a while now. I continue to find it's got like one of the best Sharpe ratios in crypto. Apart from just classic DeFi stuff, risk around it, if they were somehow to lose the private keys of the JLP vault, that would be like a huge issue. But other than that, I feel like it's got kind of a unique position right now, and Jupiter just dominates Solana DeFi, so I like it.
And that's why it's very important to talk about diversification for a second, because you wouldn't want to put all your eggs in the JLP basket, just a piece, because you hold other assets too. So if you had to allocate across 3 different buckets, what would you do?
Yeah. Look, I'll go a little bit rogue here, in that I think that Trump is going to win. And I personally think some of the really beaten up DeFi coins are not bad buys here, because I think they're moving to fee switch models, and they're down 95%. And one of the main beneficiaries I'll see of crypto policy in the US is more DeFi rather than memes. So if I was going to have a high risk bucket, let's say a high risk slice, I do think that meme coins could be a more tough hold. You can even feel it right now. But I do think some of those trades you could maybe see a 2-3x. You can just pick tier one, like some of the classic DeFi coins like Aave. You can go down, maybe even pick some of the Salana DeFi coins, which are down like 90%. Like you go to like Camino, but I would guess some of the ETH ones will probably outperform just given ETH's being called a commodity. But that's kind of what I'm looking at for my higher risk bucket. But for me, that's a pretty JLP does a lot for me. It allows me to hold stable assets and have a good yield around them. I don't need to go crazy. If I'm looking for 3 to 5x plays from now until year end, I think you could have some interesting ones in DeFi. But also those DeFi coins, people have been trying to catch knives in those for 3-4 years now, so it's always difficult to say.
Yeah, CTO, how would you play with this?
Yeah, so I don't really have a process where I buy and hold 6 months and then see what happens. So I wait for an entry where it presents itself, and then if the situation changes the next day, I would back out of it and so on. So, but I mean, things that I'm monitoring, it's the basics. I think this market is still Bitcoin led. Solana is doing well, and pretty much everything else is garbage. Everyone is laughing on gold, but the leveraged entry on gold at the $2,000 breakout was actually maybe the easiest and one of the most successful trades recently. And so I have that position. I'm still holding it. And, if you use leverage on some altcoin, you're going to wake up one day and there's been a week down minus 90% and you lost all the money. That's not going to happen on something like gold. So I think their leverage has its place. But I feel that this is kind of a boring period. Wait for the next time the rocket ship lights up, and then there's going to be 100 new opportunities at the same time, and that's what I'm waiting for. But before that, I would take $100 out of these 10,000 and use this kind of boring period to buy a couple of books, read up a little bit on trading, technical analysis. Use this time to improve your skill, because then when the market starts running again, there will be no time to react. Then you have to be ready and press the button immediately on the day.
That's such a good point, actually. Thank you for sharing that. And by the way, Bitcoin is $4,200 under the 200-day moving average, which during a bull market is very unusual. Would that not qualify as a good entry?
I mean, looking at the current price action, there is this chart pattern. I think the next logical entry from here, if we didn't catch any of the previous one, would probably be the breakout. If we get a breakout from this pattern or possibly another retest. If this breaks on the downside, I think defensive action is warranted, but we're not there yet.
Yeah,
I'm optimistic.
Been saying for a long time that 63,000 is key to get above. Once we get there, we go very quickly back to 70K.
Yep.
And here we are. Marty, what would you do? Tell us about your liquidity pools.
Do I have to enter the 10,000 right now, or how long do I have before
today?
I enter? Right now.
You can do half today. What would you do?
I mean, I would just put 5x longs on Sol, Sui, JLP, and sit back, get a bottle of whiskey till the end of the year.
DGen. But what about your liquidity prices? You want that to be sub
100?
100?
Yield. I mean, 10,000, you're only going to make $100 a day. You need more than that to make. You need 100,000 pretty much to make good money. But 10,000 leverage trade, 5x Sol, maybe 3x Sol and Sui. When that liquidity pump comes, those two are going to go to the moon, man.
And how long would you hold? How long would you hold a perp? So I have a rule: no more than 10 to 30 days.
Obviously till the blow off top or till the end of the year. Sounds good to me.
But the fees will eat you alive, no?
No. The profits will be way more than that. I just closed one that I had on Twitter for 6 months.
Yeah, 6 months.
Fantastic. Wow. I did it live on the space. It was awesome.
You're making me into a little DGen here now.
I would do it on Jupiter. I love Jupiter.
Mando, you're laughing. Why are you laughing?
It does. Funding rates are the lowest they've been all year. So I don't know. I'm just checking now what CoinGlass has. As this CoinGlass is a good website.
Just keep your leverage low. At 10x and up, it's not worth it. But 5x, 4x, 3x, 2x, amazing.
Looks like you're getting paid to be long Bitcoin. Actually, in some spots on Binance, you're being paid to be long Bitcoin. You're being paid to be long ETH. You have to pay a little bit to be long Salana, and you have to pay a little bit to be long Sui. But negative funding at this point in the market, with you got the fear and greed index at like 25, 20. There's a lot of things here. Like, you can get bullish.
Yeah.
For me, like I said at the start of the show, the number one thing for me about crypto has just always been global liquidity. That's been the base case of my trade since the moment I got into crypto, that it was a good inflation hedge. It was a good debasement hedge. For me, those tailwinds are only increasing, but they are the strongest for Bitcoin. They are the strongest for Bitcoin. Now, you could say Bitcoin rises, you're going to get an altcoin season. We haven't actually seen that. I think you'll probably see Salana rise just because people are still using it. But for me, I do think it's tough to be bearish on Bitcoin, and crypto. You just have to be selective about the fundamentals that we just spoke about.
Yeah, awesome stuff. Let's talk about the other elephant in the room, and people are very frustrated because the stock market is crushing it. All-time highs popping, some strong earnings. We have interest rate cuts coming, the written in stone for September, whether it's 25 basis points or 50 basis points, and then multiple cuts after that up to the end of the year. We have other macro stuff. We've got the liquidity is going to pump stocks, but people are saying, why? Because I always talk about correlation between like the NASDAQ and Bitcoin, and that has just broken down completely over the past 2 months. I call it the 5G dumpage, the GOX, Germany, Grayscale, yada, Genesis, US government, and there's more. There's more G's coming, probably. The election fears, a lot of people are concerned. It's like, oh, who's going to get into office? And what does that mean for my bags? And then we had the long-term holder profit taking as well when they had the all-time high. By the way, shout out to those guys that took their lifestyle chips off the table. Perfect timing. And increased competition from alternative assets and vehicles like liquidity and all that type of stuff. Where do you guys see? Anybody want to chime in here on what's happened with the lack of correlation between stocks and crypto?
I honestly think this has been more related to Trump. I think crypto was very, very bullish on that. Bitcoin Reserve pushed through a policy, just an incredibly positive agenda towards crypto, or at least a potential agenda, let's say. And part of this was related to the Trump trade kind of breaking down, and it's now looking like it's 50-50. It was all the way up at 79% chance that he would get in, and people were getting very, very bullish on immediate crypto policy coming in, potentially even by the end of this year. I also think, and I don't know if Kamala getting in is good or bad for stocks. Like last time Biden got in, stocks rallied. Like they rallied in both scenarios. You can kind of paint a bullish picture around spending, for example, under the Democrats, and you can paint a bullish picture around taxes, and let's say a more friendly business environment maybe under Trump. So people can get bullish on both of those, and often you see a rally after election in either scenario. But for crypto, you had a very specific, very pro crypto policy coming from one of the candidates, which wasn't really being matched. Now that that's done a bit more 50-50, I think that's been slightly tapered. I also think that crypto, we kind of want a light recession. And what you've seen is that the data that's come out, at least over the last week, pointed to the idea of more of a soft landing, maybe even just we don't even go into a recession. We want the money printers turned back on. We don't just want rates coming down. We want money printing globally, everywhere. And so in some ways, like a light recession would have been more beneficial for us than just a slowdown. And it looks like over the last week, we're heading more towards a slowdown, whereas a light recession, I think, would have been the key thing for crypto. And that's what changed over the last week. Like we dumped when that CPI figure came out. And when some of the key economic data has come out this week, because it implied actually that it was more a slowdown rather than a recession. And I think that's a light recession, which doesn't nuke the market, would have seen a lot of money printing, and that would have been the best for crypto.
So to summarize, Trump trade died, or at least the odds on poly markets switched radically. Yep. Over the weekend, they were a tie from what I recall, and now they're back in the box of the blue. Marty, I know you track this stuff as well. Any thoughts on why stocks are doing better than crypto? What broke down?
I mean, firstly, we have to understand on the monetary and fiscal side that the US has to pay a fortune in interest, and the only income they have is capital gains tax. So the US needs assets to pump, always. I mean, that's why assets pump. That's why presidents print money. At the end of the day, that's why the stock market's going up, right? It's held by boomers. They're pumping it. They want those capital gains. So they're in a bit of a pickle. I think the stock market's railing right now in a bubble. It's a pure bubble. I don't believe that the value of the companies is increasing. If anything, human capital is being devalued over robotics and AI. So you're going to see a big devaluation and deflation in stock at some point until they figure out how they're going to make profits with AI and robotics. Crypto is being held down. Remember, crypto is run by Binance. So Binance, together with Jane Street, I believe, the market maker for the issuers, the ETF issuers, is in an accumulation channel. They're holding the price down and accumulating in an arms race, and it'll be released at the right time. And when it does release, it'll be almighty fireworks and put smiles on your faces. It follows gold. Bitcoin follows gold. It's the new gold. And go look at the gold chart from 2024 January, guys. Go pull it up right now. It looks just like Bitcoin right now. And then the only thing to be warned of is that look at gold. You'll see they did a V-shaped recovery, right? They did a V-shaped flush before they went to the higher high. And we've got to just be patiently waiting for that. I don't believe Bitcoin will break out of 74 without, getting rid of every leveraged long they can.
That's the other by the way, to point on to gold, that's the other breakdown and correlation. Gold spikes when people are terrified. So what are they afraid of? What about that theory?
I mean, there's a lot to be afraid of. There's a lot of bad narratives. There always are, right? Tarantulas, Tyrannosaurus rexes, China, whatever you want. At the end of the day, I don't think this is. I personally don't see a lot of correlation. I think this is a very controlled distribution using a Wyckoff. Binance holds 550,000 Bitcoin. They can do whatever they want with the price. They're going to do it for maximum reward for themselves. And I think they're working with Larry Fink. I believe it's a combined approach, and crypto is just going to blow everyone's mind when liquidity comes. Janet Yellen already said in Brazil she wants 78 trillion for climate change. She was basically telling you what's going to happen. They're going to pump assets, and crypto is going to pump just as much. I'm calling 100,000 before possibly right after the election, maybe now before the election, and definitely by the end of the year.
This is what I was going to say at the bottom here. This is the third thing. There's been more specific crypto technicals, which is kind of what Marty's saying too, is that we're a small market. It can be governed by one person coming in and selling, and we had the Mt. Gox distributions, which similarly towards the end of the year when we start to see the FTX distributions could reverse, and we could be going up and gold doesn't. The breakdown versus gold is the interesting one. That's why I think it's also more related to the Trump trade. That breakdown has been more interesting than the breakdown against stocks, in my opinion, because crypto's correlation to stocks is loose. It has been loose for the last 2 or 3 years, or at least the last year. It was correlated when stocks had a little bit of a wobble, but then before 2020, there was barely any correlation with stocks.
Well, NASDAQ for the last 3 years has been 70 to 80% correlated most of the time. So it was a classic risk
in the
on
last year. In the last year?
Last year, no, it broke down since the beginning of this year. And the ETFs had a huge part of that. And Victor Peterson here asks, why are we not talking about the government selling their Bitcoins worth more than 30 billion? That's what I call the 5Gs. That's the 5 horsemen of the apocalypse keeping the Bitcoin price down. That's exactly that. So we do talk about it when we say the 5Gs. And it's not a telephone network. My new acronym. So this is cool. There's another thing that I just want to bring up, which is going
to add one thing, because I think it's maybe important. I agree with Mando. I think we had the Trump pump, which was massive. I mean, this was some of the most bullish statements from a Western politician we have ever heard in all these years, since at least I've been here since 2017. And at that time, it was the #1 leading candidate for the presidential election of the United States. It was a huge thing. Then the odds changed, and everyone got spooked, I think. And now it's like, oh no, the other one might win. Then even if that happens later, then that risk is taken off the table. So it could even be so that if that holds the market down until the election, even if then the out of the two less crypto positive candidate wins, at least that risk is off the market. Then it might still pump a little bit, like Mando, you said that the stock market pumped even though the traditionally less favorite party of the market won the last election. So because at least that risk is there's nothing to worry about anymore. It has already happened, and then sometimes the market pumps. So That's
Yeah,
my take on that.
this is what I agree with all that. Well said, CTO. This is what I don't get. This is the lamest 4-year cycle ever, but it's not. We've gone from 15.5 up to 60K. It's a 4x. As
That's what
Marty
I'm saying,
said,
James. What are the people going on
800% in the
this year?
last 12 months.
Huge.
So I don't get what people currently are looking for. Let's talk about this other thing. A lot of people believe now we will never hit $100,000 Bitcoin because of anti-crypto presidencies, market sentiment, geopolitical events, etc. This is funny because Marty, you said 100K is on the cards probably by the elections. Okay, and we've got about 10 minutes left and we've got a whole bunch of topics to get through. So let's just do a quick fire round. Who believes we'll hit 100K in the next 12 months? Mando.
Yeah, I think there's a very good chance.
Okay, CTO?
Yeah.
Marty, tell us how you feel.
Yeah, I mean, I've been calling 128 now for 6 months.
Yeah. Okay, so
Well,
that one's in the bag. That was easy. And did you believe that the governments, we mentioned in the beginning as well, that crypto's global? Crypto doesn't care about governments. The impact of the US is not that significant, but people overthink it. Marty, I want you to double tap into this real quick.
Yeah, I think what's important is the dollar. I think, guys, even Trump said in his speech, oil runs the world. It's about the dollar and oil right now. It's a boomer world.
Yeah.
And the stronger dollar is bad for the US because you get sovereign debt unwinding around the world and people start selling their treasuries. A weaker dollar is bad for the US because of the carry trade. Now, just a slight devaluation against the yen, and you saw what happened. So they're in a pickle. Janet Yellen is in a massive pickle. I'm
the
saying
yen
it all
strong
along.
again.
And there's only one way out, and that's the printer.
And the yen pumped today as well, which doesn't help things.
No, they're going to have to print. They're resisting as much as they can, and Bitcoin is getting prepared for that. Binance is not going to carry longs to the moon. They're going to shake out as many people as they can, and they're doing it to perfection. People are falling for it. The best right now is sit back and do low leverage longs or accumulate. That's it. To do what the smart money is doing. Michael Saylor is definitely going to pull the $2 billion trade. He hinted at it on Twitter this morning, on X.
Yep.
And we're getting close, people. 180 days is usually when we see the vector. And we're at about 168, 170 days right now. Just be patient.
And this is the other
macro pros. Go ahead, sorry.
This is the other big question. I know all of you here, if I'm not mistaken, have a little bit of Tesla somewhere hidden away. Fair to say, but not all of you probably have MicroStrategy. That happens to be my biggest position, but it's not my fault. It was a bet I made with options during the bottom of the bear, and it paid off in a very big way. So now I'm very overweight MicroStrategy. Marty, you said there could be a backdoor deal, OTC, between the US government.
I mean, it's pure speculation based on the dollar amount and the timing. Like the dollar amount, the $2 billion, we know that they have the Silk Road wallet, which they moved exactly $2 billion 3 weeks ago to a random wallet I'm watching. It just feels like they're doing an intermediary OTC swap for treasuries or some kind of bills or notes or something.
And highlight how Coinbase is in the middle between the sheriff's department or whatever it's called and MicroStrategy.
Well, Coinbase signed an agreement the government signed an agreement with Coinbase to be the custodian for their seized funds, and they sent 1.2 billion to Coinbase. So no one knows. It's all speculation. Remember, that's the problem with centralization is once it hits Coinbase, it's all commingled, just like FTX. We don't know where it goes. We can't tell. So crypto is perfectly transparent until it hits the centralized exchanges. So in a way, Coinbase is the new Tornado Cash. Okay? Yeah. Reality check. We don't know.
Mando, over to you. We're sorry for this going so fast. We've got to get all these questions in. 39 filings. We saw a lot of new stackers. We know pension funds, etc., are stacking. We had a very interesting alert that a massive Korean pension fund was stacking MicroStrategy. And then we've got huge developments where you can buy a car for $30,000 and it'll drive you around LA for 3 hours without any interventions. These are kind of three very interesting. They should be the cornerstone, I believe, of every portfolio in one way or another. Tell us about diversification and rotation and how you view this market. What would you, if you had to pick one to be on right now for the next, say, 6 months, what would it be?
I think I'd probably pick Well, the difficult thing is MicroStrategy and Bitcoin. MicroStrategy is essentially levered Bitcoin. So, like, you're talking about diversification here. You've got Bitcoin, levered Bitcoin, and then Tesla. I do think that I have a lot of crypto, so probably having a little bit of Tesla is good for me. A bit more Tesla is good for me from a diversification standpoint. I do think that that Bitcoin is going to go to 100K in the next 12 months, and arguably MicroStrategy is probably the best way to play that. But in my world, you could also just have levered Bitcoin, or you could have, like I've just had, JLP as well. I think but out of those three, I do think the best risk reward. Yeah, for me, I would probably put it into MicroStrategy or levered Bitcoin if you wanted to make crazy returns. I do think Tesla's going to, over the next 10, 20 years, I don't know where Tesla's going. Like, it could go to an absolutely insane level. So, but I don't know if that's going to happen over the next 6 months. It feels like a lot of that is
Exactly.
kind of be pushed out a little bit longer than that.
And I completely agree with you. They're very aligned. CTO.
Yeah, I have both Bitcoin exposure and Tesla exposure. I don't have MicroStrategy. Actually, I should have. If I could, one thing I should have done, I think I should have gotten more MicroStrategy exposure earlier. It doesn't really matter. I mean, Bitcoin also goes up. But yeah, actually, that's one thing that I should have paid more attention. You explained it very well, James, years ago, and I kind of didn't get it really. I didn't really pay attention, but I think the model of MicroStrategy is actually brilliant as long as Bitcoin keeps going up, and I am interested in it. I'm monitoring the chart patterns there, and I think I will add some MicroStrategy on top of the Bitcoin exposure. Tesla, we talked about it many times actually, and I think Tesla was really the standout here a couple of months ago already, where all the other tech stocks had really rallied off already, and they were very difficult to find any new entries because they had already run up. The entries was years or at least months ago. But Tesla still presents an opportunity, I think, if I can share the screen for a second.
Yes, please.
Tesla has this very well-defined chart pattern with a clear support that we talked about that actually gave another entry here in April and almost hit that support in August. And then it has like a lower highs trend, which is what I think has gotten a lot of people to get bored of Tesla. But if this breaks on the upside, I think that could be a controlled entry in Tesla. That hasn't happened yet. So I'm very interested in that to add on that one. Also, I think more bounces on support could also be another entry.
I know it's a different time frame, CTO, but if my memory serves, this kind of channel downwards, lower lows, lower highs, is very similar to Bitcoin over the last 5 months. You want to pull up Bitcoin and see how similar it is?
Yep.
So the question is that a bullish pattern?
I mean, it could
that one, yeah.
So
you had a chart with a line.
Yeah, that's one probably.
Yes.
The point is that if it breaks on the upside, there is a well-defined entry point there. Then if it invalidates, you don't risk much on the downside and so on. Because if looking at most of the other tech stocks, we talked about it at the time, but many times people come too late and they ask, should I buy this stock or that stock and so on? Okay, but the entries, they were ages ago. Like the Nvidia entry was down here in current price levels, and was at $18, coming at 126 and trying to buy. Of course, the risks are massive. So how to find a new entry on these ones? And it's pretty difficult on many of these tech stocks. But the next possible entry on Tesla actually hasn't happened yet. So I think that one is very interesting to monitor. And I personally am interested to buy more in Tesla if that happens.
Yeah. Awesome stuff. Let me see where we got now. We talked about this. The last kind of topic that people want to talk about is, why is blockchain not used for elections? We talked about use cases before, etc. And a lot of people are very concerned all around the world. This is going to be the biggest year for elections on the planet. I think something like 2/3 of the planet has massive elections happening this year. But many countries of the world, a lot of people believe the elections are not fair, they're not transparent, they're not verified. Why don't countries use a bloody blockchain to do this? Marty, over to you, buddy.
No, I feel your pain. I mean, there are in smaller countries, they have trials and they have been very successful in Estonia. And it always goes back to the fact that the Estonian president is in his 50s. It's about trust. I don't think in regulation. The US regulatory has been so anti-crypto and so misinformed and so misinformative. People don't know what the hell's going on. They don't even know what a blockchain is. So it's a matter of time. But absolutely, I believe that blockchain will actually make democracy real for the first time ever using technology. So I think it's coming. And, I'm 54. My age group, Gen X, we're coming in. Michael Saylor, Elon Musk. We believe in it. And it's just a matter of time before we get the job, and make the decisions. So just hang in there. The transition is coming. Blockchain voting will be governance, rights, value, ownership. Everything will be on chain. Right now, we're doing a little bit of a hustle. But absolutely, blockchain is built for governance. Literally, you can envision the app on your phone, biometrics, register to vote, red, blue. You click, it's anonymous, on chain, the results are live. Done.
Yeah.
4th of November, you know who won. It's there. It's totaled.
Yeah.
It makes so much sense, and it's free. Public blockchains are free.
I think it was Taiwan had an election from beginning to end in like 3 hours. So from the polls opening to closing. Anyway, this is something else as well. I made a video on this back in a year and a half ago about how all the labor statistics data is a lie. It's all garbage. A 4-year-old child could calculate it better. Now we got news that for the April 2023 to May or March 2024 period, the BLS, or should I say the BLS, is going to remove 1 million jobs from their calculations, which basically means there has been no job growth over the last year. In fact, negative growth. Could this be a ding to the market, or a little bit of a black cloud, or a little bit of a gray swan when people realize that the economy is not strong? Jerome Powell has been using data that's completely erroneous. This, for me, is extremely serious, and nobody cares. Mando, have you been tracking this story?
Yeah, I've been tracking it. I saw a few people come out. I think I saw a tweet from Shamath saying, "Oh, we're already in a recession." He's been saying we've been in a recession for the last 6 months. You tend to see this a lot. Like, you only find out 6 months after that you've actually been in a recession. I don't think the economic data, like in terms of growth, shows this, but there's been a lot of very dodgy reads in the employment figures for the last 12 months. Like some of the beats have been because of temporary jobs, and we've beat pretty much every single time, or been close to beating. I think it was like 11 or 12 months in a row. It was crazy how many beats we had, and then to see this come through, and you picked up on it. I don't think many people picked up on it. Went through all the mainstream media today, and no one picked up on the fact that we just lost 1 million jobs.
Yeah,
which is kind of wild. In terms of, I think 115K jobs were added last month, right?
Yep.
So on that run rate, that's like 10 months worth of jobs just gone, which is kind of funny. But yeah, it's definitely something you should look out for. Like, you often will hear about a recession months after you've been in it. That makes sense.
Yeah, and before I forget, don't forget to subscribe to every channel. We're also streaming on all our respective channels here as well, so make sure you follow all these great people, Marty, CTO, Mando. Final thing, as a little bit of optimism hit, everybody, liquidity. This is the liquidity cycle.
Come on,
Marty,
Janet.
you talk about it. Mando, you talk about it. Mando, walk us through this chart from a TA perspective, please. What does it mean?
This looks like it's going to the moon, guys. This is basically showing that you're starting to see domestic liquidity in the US pick up. It's difficult to track this in various different forms, but we've seen it go up in China, which is the other big central bank. Japan's obviously, it's been doing that for a while. It's obviously slowing down slightly now, but global liquidity is going higher. The US is where this will really start to matter. And this is the main chart for me. It's been the main chart for me since I got into crypto in that big spike in 2020. Like, it just felt like it was the best thing to be in. To be at all-time high, because the ETFs came in and kind of, let's say, slightly left translated our cycle, before the global liquidity cycle actually turned, that's great. That means for me that we're going to go higher. The only caution that I have is I think that this really impacts Bitcoin the most. But I do think, this is going to be a very, very bullish tailwind. Like, this isn't the sort of market that falls out of bed by any means.
Yeah, well said. Well said, everybody. So we tried to keep this to an hour. We could probably talk for another 4 hours, but you audience don't have the time. And you, these gentlemen, we have CTO in a submarine, Mando, hopefully at home base somewhere, and Marty in his shelf room.
I'll start up my space after this. If anybody wants to join, I can keep talking.
Yes, don't forget to join Marty Party's space, and he's got trading spaces. Sounds like a movie, wasn't it? Trading places, trading spaces.
Yeah, I'm actually starting a new one next month for subscribers only.
Yeah.
You guys should come. It's called Office. We should do that. Come in. We'll do the Office on my space.
Any closing thoughts, everybody, from the submarine? Any closing ideas?
I mean, guys, just because it's boring. I think so too. The printers are going to be back on. Elections are coming in the US and a lot of other countries. They're going to cut rates. They're going to print more money, pump the markets. That's what I think is going to happen.
Yeah, people still want their Lambos. Marty, final thoughts before your spaces?
Yeah, I mean, if everybody just wants to be optimistic, stop looking at your charts and just look at global liquidity. I posted the formula in X. You can get it. It's a long formula we worked out. I can show it on the screen, but we run out of time. Just watch global liquidity. It's turning up, and it goes first slowly, and then it goes to the moon, and everything will just run after it. Just remember that the markets are controlled by gamblers right now in crypto. It's still low liquidity, controlled by the exchanges. They're selling positions. Everyone's optimistic, so they long. The exchange flushes them. They long. Exchange flushes them. They're just making hand over fist money, waiting for the moment when the top is pulled and we go up.
Yeah.
So just be patient. Don't get down. Don't get down.
Mando, you have a fan in Liverpool, by the way.
Oh, really?
Sean. Yeah.
My family's from Liverpool. So.
Pardon?
My original family, yeah. They are originally from Liverpool, yeah.
Awesome. So you like the soccer game, as they say.
I'm actually a Chelsea fan. So my dad is a Liverpool fan. I'm a Chelsea fan.
Awesome. Let's not talk religion.
No. Let's get a lot of people hating me straight away.
Yeah. Oh, I know. It's like politics, football.
Yeah.
And what else? Religion are the things you've got to avoid. Thank you, everybody. Have a great week. Thank you all for coming. And thank you to mods in the chat. Thank you, CTO. Keep your life jacket on. Thank you, Marty. Thank you, Mando.
Next week, you got the nuclear codes over there. Where are you, man?
Yeah. I'm going to launch the torpedoes to all the innovation haters and hit them from behind, from the bottom when they least expect it. Then they will jump up and quit being so against crypto.
Exactly.
Yeah,
Thank you all.
Everyone, be more upbeat. Everything's great. We're going up.
See you next week. Bye all.
Yeah. Bye.